You might look at a company like FEMSA, rooted in convenience stores bottling, and think, maybe slow to adapt.
Right. Old school, almost.
Yeah, but what happens when a giant like that goes all in on digital, especially when the market's throwing, curveballs?
Exactly. It's a fascinating story, balancing that tradition with some pretty aggressive innovation.
So today, we're unpacking that. We're diving into FEMSA's second quarter 2025
We're
results
peeling back the layers on their big digital expansion strategy and looking at how the whole portfolio is doing in this, well, dynamic landscape.
and our insights. They're coming straight from the source.
Hmm.
FEMSA's Q2 2025 conference call, their financial reports.
Mm-hmm.
Our mission for you is simple. Get the most important nuggets from all this, give you a shortcut to understanding FEMSA's moves, their challenges, and their plans for growth.
Okay, let's start with the digital side. The big story there is Spin.
Spin. Right. Used to be digital off FEMSA.
That's the one. It actually grew out of OXXO's long history with cash payments. I mean, that's core to OXXO. But the vision now, it's much bigger. It's not just payments. It's really about evolving OXXO's whole value proposition, keeping it the most convenient way to get everyday stuff done.
Because as they say, you can't imagine convenience retail today without a seamless digital piece.
Exactly. It has to be integrated.
Okay, but that sounds challenging. I mean, integrating a huge physical network like OXXO with a cutting-edge digital platform. What does this omni-channel ecosystem actually look like?
It is definitely challenging, but they're making real strides. Take Spin by OXXO, their digital wallet, launched in 2021. Already over 14.5 million accounts.
Wow.
And get this, more than 9.4 million of those were active in just the last 56 days. It's across Mexico, young user base, and over half are women.
That's interesting. A group maybe underserved by traditional banks?
Precisely. So it's tech, yes, but it's also about financial inclusion, which is a huge angle here.
That's a massive user base so quickly. And the rewards program, Spin Premia, that sounds key too. Over 58 million accounts.
Huge. And 26.6 million active recently. But here's the really interesting part, connecting it back to OXXO.
Yeah.
Nearly 46% of OXXO sales in the quarter were identified through that loyalty program. It even hit 47% in June.
Okay, so it's not just some add-on. It's actually driving people into the stores
Right.
and tracking their behavior.
Absolutely. It shows that digital-physical link is working. It's reinforcing the stores.
And they've made acquisitions too, right? NetPay, Connecta. What about OXO Pay? What does that actually do?
OXXO Pay is... It's kind of a crucial bridge. It lets you buy something online, e-commerce, but pay for it with cash in an OXXO store.
Ah, okay. So for people without cards or who prefer cash.
Exactly. It opens up e-commerce to a much wider audience in Mexico, and people are using Spin for average user over 21 transactions a month.
21.
Yeah, and about 20% of those directly relate to OXXO cashing in, cashing out, using the card there.
And it's not just consumers, right? You mentioned Spin Negocios.
Right, the B2B side. Reaching almost 20,000 small and medium merchants. Processing nearly 12 billion Colombian pesos monthly, so it's got business legs too.
So this seamless integration idea, it's really happening. Can you give some more sort of day-to-day examples?
Sure. Think about topping up your phone. You can do it in the Spin app, or you can walk into OXXO and pay cash.
Okay.
Or peer-to-peer payments. Use a QR code on your phone, send money, and the other person can cash it out at an OXXO.
Right.
Or the OXXO Pay thing we just mentioned, buy online, pay cash in store. It's all about giving people choices that fit how they manage their money.
Okay, so they're building this like digital nervous system. Where does this lead? What are the big future opportunities?
Well, the data is obviously huge. All this activity lets them personalize services, which makes OXXO even more valuable to customers.
Right.
And that data foundation opens doors for things like retail media. They said early results there are quite promising.
Retail media, like ads based on purchase history.
Exactly. Plus expanded product catalogs online, maybe last mile delivery, click and collect. You can see the potential.
And the really big prize, I guess, is full financial services. Savings, credit.
That's the long-term goal. They've actually launched their first personal loans this year.
Loans. That's a different ballgame, isn't it? Riskier.
Definitely. And they know it. They're moving cautiously, working on licenses, looking for partners to manage risk. They explicitly said no surprises for investors on this.
Okay, that's reassuring. Now, what about the economics of Spin itself? The cash burn is improving.
Yeah, it's getting better. Down from around 4 billion Colombian pesos annually to about 3 billion. And they've slashed the cost to serve by 48%.
That's significant.
But here's a really interesting accounting point. A lot of spins benefit to FEMSA, like driving, 25% of OXXO's cash-in activity doesn't actually show up on spin's own profit and loss statement.
Why is that? How does that work?
It's because of their conservative accounting. Since spin is so tied into OXXO's physical operations, some of the value it creates gets booked directly under OXXO's results.
So spin might look less profitable on paper than its actual strategic value suggests.
Exactly. It means spin is contributing significantly to OXXO's success, even if its standalone numbers don't capture all of that yet.
Which raises that classic question, doesn't it? How do you measure the true value of these big strategic bets when everything's so interconnected?
Precisely. And they're trying to address that. Spin has its own sort of agile, tech-focused culture, almost like a startup inside FEMSA.
Right.
And crucially, by the end of this year, 2025, the plan is to have joint P&Ls and KPIs between OXXO and Spin executives.
Ah, okay. To get a clearer picture of the combined value.
Yeah, better alignment, a more holistic view of how Spin is driving value for the whole system.
Okay, let's pivot then. How is FEMSA overall navigating the wider macro environment, looking at the Q2 results?
Right. So, consolidated picture. Total revenue grew 6.3%. Operating income was up slightly 0.2%.
Okay, sounds decent.
But net consolidated income dropped significantly, down 64.3% to 5.6 billion Colombian pesos.
Whoa, 64% drop, despite revenue growth. What happened there?
Yeah, it's a huge swing. The main culprit was a big non-cash foreign exchange loss, about 4.1 billion pesos,
Forex loss. On what?
on their US dollar cash holdings. Because the Mexican peso got stronger against the dollar, the value of that dollar cash, when translated back to pesos, went down.
Compared to last year when maybe the peso was weaker.
Exactly. Last year they had a gain, this year a loss. It's a swing of over 10 billion pesos just from currency movements.
So that really highlights the currency risk for companies like FEMSA holding dollars.
Absolutely. It shows you need to look past that bottom line net income figure sometimes to see the real operational health. There were other factors too, lower interest income, higher taxes, partly due to non-deductible costs and spins losses.
Okay, let's zoom into OXXO Mexico then. Proximity Americas. Sounds like a tough quarter there.
It was challenging. Average ticket was actually solid, up 6.6%. But traffic fell 6.6%.
Oof, they cancel each other out.
Pretty much, resulting in a small 0.4% decline in same-store sales. That sustained traffic weakness is the big issue.
Why the drop in traffic? Just the economy.
Partly a weak consumer environment, definitely, people tightening their belts. But also, they pointed to really bad weather, unusual cold and rain.
Weather. Affecting convenience stores.
Yeah, hitting core categories hard. Things like soft drinks, beer, tobacco. People just didn't buy as much.
And is it price competition? Or something else?
They said it's less about specific item prices and more about the mix. People choosing, say, bigger returnable bottles of drinks or smaller, cheaper snacks or cigarette packs, stuff they might find more easily in traditional markets or other channels.
Making value trade-offs.
Mm-hmm.
So what's OXXO doing to fight back?
They're running various commercial initiatives, looking at packaging formats, boosting the coffee value proposition, running promotions.
Any signs of life?
Well, they did mention a potential green shoot. July apparently saw positive same-store sales, low single digits, so maybe turning a corner, but it's early days.
And they're still expanding. Adding stores.
Oh yeah, added 334 net new OXXOs in the quarter. Still on track for 1,000 to 1,100 net additions in Mexico this year.
Including those OXXO Nicos. Stores inside factories or hospitals?
Exactly. An increasing percentage are those NICO stores. They see them as strategically valuable. Apparently, they even help reduce employee absenteeism at those locations because people can access financial services easily right there.
That's an interesting side benefit. What's the core strategic value, though?
Well, they're embedding OXXO into these captive communities. Extreme convenience, yes, reduces absenteeism, but also gives them a locked-in customer base. Probably higher sales per store, deeper integration, harder for competitors to reach.
Makes sense. And OXXO USA, any movement there?
Yeah, they converted 40 DK stores to OXXOs in West Texas. Said early sales results are promising. Planning for El Paso next.
What about efficiency? Labor costs are rising everywhere.
They're tackling that, using data analytics, trying new, more flexible shift policies, also running experiments for the eventual 40-hour work week mandate in Mexico.
And they think they can coexist with the hard discounters.
Yeah, they seem confident. They estimate the category overlap is only about 20%, so they're not always going head-to-head on the same items. Different needs, different occasions.
Okay, quickly then, other divisions. Veda, the discount format?
Accelerating expansion there, 23 new stores in Q2, aiming for 30–40% store growth this year. Focus is on optimizing that discount value and really scaling up their private label. Plan is to double the private label offering.
Private label focus makes sense for discount. And Valora in Europe.
Solid results there, converting stores to their successful Avec banner. Growth in Europe is different, though, often working with existing operators like gas stations or converting existing stores like in German train stations. Less building from scratch than in Mexico.
Right. And the health division. Mixed bag.
Very mixed. Strong in Colombia and Ecuador, but Mexico.
Wow.
That remains challenging. They closed 432 underperforming stores there in the last year.
Wow, 432 closures.
Yeah, they called it a major surgery. New management is looking for ways to disrupt this industry in Mexico. Contrast that with Brazil, where they're super bullish, expecting around 20% growth. Very different stories.
Okay, let's look at capital allocation and the future. Coca-Cola FEMSA, KOF. How are they doing?
KOF reported a 5% revenue increase, which is pretty good considering the headwinds.
Headwinds?
Yeah, adverse weather again and tougher demand, especially in Mexico and Central America. Volumes there actually declined nearly 10%.
10% volume decline, but revenue up. How did that work?
Pricing, product mix,
No.
focusing on higher value stuff, plus they're leveraging past investments. And their digital platform, Juntos Plus 4.0, is really taking off 8 times more active users than last year. That helps engagement.
So digital helping the bottling side too.
Definitely. And KOF also showed financial strength, issuing $500 million in senior notes successfully.
Okay. And the FEMSA Forward plan. They sold off most of the logistics business.
Yep, that deal closed July 1st. Successfully done.
So what's the top priority for cash now?
Their stated top priority is investing in and growing their core operations. Retail, beverages, the digital push, focusing on the core.
And shareholder returns. They made some big commitments there.
They did, and they're on track. They committed to deploying about $3.2 billion between March 25 and March 26 through dividends and buybacks.
How much have they done so far?
About $374 million in buybacks executed. And they've paid out 2 of the 4 dividend installments, totaling nearly $1.2 billion.
So they're delivering on that promise. And their debt levels.
Pretty low. Leverage ratio is 0.93 times.
Yeah.
Their long-term target is up to 2 times. So they have significant flexibility, lots of room to maneuver.
Lastly, leadership.
Yeah.
Any news on succession?
The board is actively working on it. They said news is expected later this year.
And the board itself has changed. More digital expertise.
Yeah, that seems significant. New members with serious digital chops, like Carlos Arroyo. It signals how critical digital is. They're apparently pushing for speed on digital transformation.
But urging caution on the credit side of financial services.
Exactly. Push hard on digital innovation, but be careful and deliberate with the financial services risk. It shows digital isn't just a department. It's core strategy now, right from the top.
So, wrapping up, we've seen FEMSA doing a lot, haven't we? Aggressively pushing Spin's digital ecosystem.
Yeah, while meticulously tweaking the core OXXO operations because of market pressures and weather.
And optimizing the whole portfolio across different countries and different businesses. It's complex.
It really is. And maybe the provocative thought here is about spin. Think about how FEMSA isn't just reacting to digital, they're actively trying to redefine convenience itself.
How so?
By weaving digital so deeply into the physical stores, the OXXOs, that fusion, physical and digital, aimed at including millions financially. Could that become the new benchmark?
The benchmark for consumer services, especially in emerging markets. What does that mean for traditional retail, traditional banking, as the world keeps digitizing so fast?
Something to think about.